Hey everybody, Logan Alex CPA here with Choice Tax Relief. A while back, I made a video on offer and compromise tips. Maybe this was basically a video with 7 tips that I gave folks interested in the IRS compromise program to increase their odds of the IRS accepting their offer and compromise, which is, of course, an agreement with the IRS to settle your tax debt for less than you owe. And one of those tips I offered in that video is make sure that you are compliant with your current year taxes before you submit your offer. Okay, so if it's 2025 and you're submitting your offer for taxes from 2024 and before, well, make sure that you are making your required estimated tax payments quarterly for the 2025 tax year. If you're a wage earner, make sure that your withholdings that your employer is taking out of your paycheck and sending to the government are sufficient to cover your tax liability for this current year, let's just say 2025. And BSBA Babic had a comment on this that I want to address. They say payment compliance only applies to self-employed, not people working for a company. I know someone that got his offer and compromise accepted even after not paying 1 cent for his current tax year. So Babic, I have no doubt that this happened. Stranger things have happened in the doorways and hallways of the IRS, and particularly in the centralized offer in compromise unit. But it is the IRS's guidance to offer and compromise employees, and particularly the process examiner that first examines the offer and compromise when it's submitted to make sure it's processable before it goes to an offer examiner or gets kicked to an offer specialist. The IRS instructs those process examiners to ensure the taxpayer is in current compliance with their current year taxes, not only for self-employed individuals who have to pay estimated tax payments, but also for wage earners. This is directly in the IRM, as a matter of fact. I'm in Part 5 of the IRM, Chapter 8, Offers and Compromise, Section 3, Centralized Offer and Compromise Transfers, Perfection and Case Building. Perfection refers to the perfection of the submission of an offer in compromise. How to get that offer in compromise to a point where it can be processed if when it was submitted, it was not processable. And the section, this is a long section. I'm just going to do a search for estimated tax payments. This is it. This is it right here. Okay. The process examiner will determine if estimated tax payments are required and request any delinquent payments as part of their case perfection actions. Taxpayers who may be responsible for estimated tax payments include self-employed individuals, retirees, investors, corporations, or wage earners with inadequate withholding. So even if you're a wage earner, an employee who works for somebody else, I think in Babic's terms, people working for a company, right, where they withholding taken out of their paycheck, IRS is saying even if you're in that category, people working for a company, an employee, you still may be required to make estimated tax payments to cover your inadequate withholding. Okay, the IRS is very clear. The process examiners are instructed to examine this for every taxpayer who has submitted an offer in compromise to make sure that they are paid in for the year so far, whether they're a self-employed individual, whether they're a retiree, an investor, a corporation, if this is an offer on behalf of a corporation, or a wage earner, an employee. So, Babic, I'm not saying that your friend who didn't pay a single cent in for the current tax year didn't get his offer and compromise accepted. I mean, things fall through the cracks at the IRS a lot. It's a very imperfect organization. But I don't want anybody out there to count on that, to count on the process examiner not doing their job, not following the guidelines for their job, which includes making sure that anybody who submits an offer in compromise, including wage earners, including employees who work for a company, making sure they're paid in for their current year taxes. And another thing, Babic, I want to point out about, your friend, and again, I'm sure this happened as you say it happened. But let's say your friend falls through the cracks and let's say this happened this year. Let's say this happened in 2025. Your friend got his offer in compromise accepted for tax year 2024 and before, and he hasn't paid a single cent in for his 2025 tax liability, right? Let's say he told his employer, I'm exempt from withholding. Don't take anything out of my paycheck. No tax. No income taxes out of my paycheck. Well, what's going to happen, right? What's going to happen in 2026 when he files his 2025 tax return? Well, I sure hope that he has money set aside to pay his whole tax bill for 2025 and 2026 when it's due on April 15th, or he is going to default the terms of that offer in compromise, which say that you must remain in compliance for 5 years after offer acceptance, or you will default and you'll be right back owing that same tax you did before the IRS accepted your offer. Okay? Filing compliance, filing your tax return timely, or getting an extension of filing by the extended deadline, and payment timeliness, right? Which, if they don't catch you for the estimated payments or the making sure your withholding is good throughout the year, well, that certainly means making sure you're all paid in by April 15th, right? If we're talking about an individual here. And that's directly in the IRM as well. This is a different section, okay? This is IRS guidelines on how its employees should monitor offers in compromise. This is another long section. How does it start? I think it starts with failure to. Yeah, failure to. It's down here somewhere. Sorry, I didn't realize this was so long. Well, let's just go up here. Right. OIC potential defaults. Okay. When taxpayer fails to meet any term of an offer, the offer may be defaulted and all liabilities reinstated. Isn't that scary? All liabilities reinstated. You thought you submitted this offer in compromise, IRS accepted it. You settled your $100,000 tax debt for $5,000. Whoop-de-doo, you're over the moon. You pay the $5,000. You think that's it? No, they can reinstate all those liabilities if you do not comply with the terms of the offer. And part of complying with the terms of the offer is you must timely file subsequent tax returns and pay all taxes due during the compliance period, which is that 5-year period that I am referring to. Failure to make an OIC payment. Failure to return refunds. Okay, here we go. No, that's not it. Okay, so this is about failure to adhere to compliance terms, return delinquency. There's one called balance due, too. There it is. Failure to adhere to compliance terms, balance due. Okay. And basically, they say that when the reason for the noncompliance is failure to pay taxes on a subsequent tax period or liabilities assessed after offer acceptance on tax periods not included in the offer, take the following actions. Taxpayers are required to timely pay their taxes as term of the accepted offer. The extension to pay liability should only be granted once within the 5-year monitoring unless the taxpayer provides special circumstances or was in a disaster area. Folks, you only get one screw up in this 5-year period, and you got to pay it fast after that. Okay? Right? You can get one extension during the 5-year period if you aren't paid in by April 15th, but that's it, right? You mess up again, it's highly likely the IRS will reinstate your liabilities. Okay, so my response to Babbitt is this: look, I totally believe that your friend is being truthful and he got his offer accepted even though he wasn't paid in for the current year. However, no one should count on that because that is not typical. And processing examiners are explicitly instructed to check for current year payment compliance, even for wage earners. And even if you do somehow avoid that requirement for offer submission and your offer is accepted, you will still probably default your offer unless you have saved that money throughout the year to pay by April 15th, right? Because you're not complying with the, one of the compliance terms, right? Which is that you need to pay your tax liability in subsequent years for 5 years. So anyway, folks, thank you so much for watching this video. Thank you, Babbitt, for the comment. I hope this was interesting to you. I welcome any more comments you have. And I welcome anybody's comments on the Offer in Compromise program or anything else pertaining to tax debt. If you owe the IRS or your state $10,000 or more, go ahead and give us a call here at Choice Tax Relief. You get a free consultation, 866-8000-TAX. That's 866-8000-829. Or you could visit our website, choicetaxrelief.com, fill out the form on the homepage, and we will reach out to you. I also have some other offer and compromise videos here on the left-hand side of the screen. I think I have a offer and compromise playlist with all my offer and compromise videos here at the bottom left-hand corner of the screen. Thank you so much for watching, everybody. Thank you, Babik, for your comment, and I'll see you in the next video. Bye-bye.